Hey guys, it's Mike, your guide on the trail to financial freedom. You're probably watching this video because even if you love your job, at some point you're at least going to want to have the option to retire. Maybe you've even tried to start a retirement account and just kind of didn't know where to begin. Well, by the end of this video, you're going to know how to open a retirement account, how to invest in that retirement account, and how to manage it yourself. Just want to clear something up really quick. A retirement account is not an investment in and of itself. Just think of it as a box that holds investments, okay? So you have this retirement account, this box, you're putting investments in it, and you're telling Uncle Sam, whatever's in this box, I want you to treat differently for tax purposes. Either give me a break now or give me a break down the road when I pull that money out, right? And that's the difference between a traditional or a Roth account, okay? I'm not gonna get into all the specifics. I'll put a link down in the description there for you. But just know that, for most people, you have the option of doing one or the other, all right? This video is gonna talk about IRAs, individual retirement accounts. However, just want to throw this out there. If you have an employer-sponsored plan like a 401k, you're gonna wanna contribute to that first if they're offering a match, right? Because if you're putting $1 in and your employer's, then matching you and putting $1 in, that's free money. You're giving yourself a pay raise. So it would be, crazy not to do that. But looking back at IRAs, individual retirement accounts, anyone can open one up, right? You just have to have earned income, right? So you have a job, you're making money to be able to contribute. There is one exception though. If you are a non-working spouse, right, the stay-at-home parent, as long as your significant other is making money, you can still contribute to an IRA. Okay, I'm gonna cut over to the computer screen now and show you step-by-step how to open up an IRA. It's really easy, all right? You don't need a lawyer, you don't need an investment advisor. It probably takes like 10 or 15 minutes to do, and I'll show you step-by-step. All right, let's get to it.
All right, guys, this is how easy it is to open up an IRA at Vanguard. Just Google open up IRA at Vanguard, click the link here as it says 3 easy steps. You want to read up on the differences between Roth and traditional, just, so you got all the facts and you can make the decision that's best for you. Step 2 is to pick a fund. Now in a minute, I'm going to talk about a set it and forget it, all-in-one package deal called a target retirement fund. I'll go into all the benefits there in a minute, but if you wanted to read more, you could click in here and there'll be a link. And then step 3 is open it up. As it says, you do need a minimum $1,000 deposit for that initial deposit. However, after that, you can make a $5, $10, $100, doesn't matter. But that initial deposit does have to be $1,000 minimum. And all you do is click open your IRA today. Open my account. I assume you're going to be funding it from an electronic bank transfer. If you don't already have a Vanguard account, click no, I'm new here. And then as it says, you will need your routing and your bank account number, and then your current employer's name and address. Okay? I'm not going to go step by step. It is extremely easy to do. Anyone that's filled out any type of form, it's just name, address, contact number, email address, things like that. Very, very straightforward. Takes less than 5 or 10 minutes to do. Once that's complete, as it says here, you'll watch for confirmation. They do whatever they do on their end to ensure everything is correct. And then at that point, you are the proud owner of an IRA.
All right, guys, welcome back to the great outdoors once again. All right, now that you have your IRA open, the next question is, how do I invest in it? I mean, there's thousands of different, stocks, thousands of different bonds. What do I do? Mutual funds, ETFs? All right, it's really easy. You can literally get a complete package by owning one fund. Yep, you heard me right, one fund, okay? What it's known as is a target date fund, okay? They go by different names, the target retirement, the freedom funds, the life cycle funds, just depending on who you're investing with. But they all do the same thing essentially. And how you find those is there's a date in the name, right? So it'll say the target retirement 2050 fund. And that's designed for someone that's retiring in the year 2050. So you just need to figure out, hey, when am I going to be retiring? Okay, I'm going to be 65 or so in this year, roughly speaking, and you pick that fund. It couldn't get any easier, right? It automatically invests across different asset classes, automatically adjusts to become more conservative as you get closer to retirement. It's amazing. Okay, so besides being ridiculously easy, I'd say the three main benefits that it provides are: one, diversification. We'll get into that. Two, an automatically adjusted asset allocation. And then three, it's dirt cheap. Okay, so number one, diversification. All that is a fancy term for don't put all your eggs in one basket, okay? You know, if you had all your money in, let's just say Blockbuster, right, back in the day, and then Netflix comes along and Blockbuster isn't really a thing anymore, you know, you're gonna be hurting, right? So what these funds do is they provide broad diversification across all different companies, all different sizes, domestic, international. The Vanguard funds in particular, I know they invest in over like 3,500 US companies, over 7,500 international companies, like over, and that's just stocks. And then bonds, it's well over 10,000 bonds, both domestic and international. So you really can't go wrong. Number two is the asset allocation. And that's just a fancy term meaning what percentage of your assets are in stocks versus bonds, you know, or broken down further, you know, domestic versus international, etc. And generally speaking, when you are further out from your goal, right? So let's say you're in your 20s or 30s and you got a lot of time ahead of you, you can afford to be riskier, meaning you're gonna have more of your assets in stocks versus bonds, right? So a 2050 or a 2060 fund right now might have an asset allocation of 90% stocks and 10% bonds. But the beautiful thing about the target retirement funds or the target date funds is you don't need to worry about it. It automatically adjusts. So as you get closer to your goal, retirement, it's automatically going to adjust for you, right? So, you know, maybe 10 years down the road, it'll become 80% stocks, 20% bonds. And, you know, another 10 years and it'll shift, right? It just keeps shifting automatically. All right, and then the third benefit is really low costs. Just speaking to the Vanguard funds, those are the ones I'm most familiar with. Their target retirement date funds, it's like a 0.15 expense ratio. All right, so that means $1.50 in expenses for every $1,000 you have invested each year. All right, I mean, it's practically nothing. And then if you sign up for their online account statements instead of the mail, it'll actually save you 20 bucks a year as well. That's all we got time for today. At this point, you know what a retirement account is, how to open one up yourself, and how to invest in it yourself. Couldn't be easier. Target retirement funds, set it and forget it. Once a year, go in, see if you can, you know, contribute a little more if you got a pay raise or something, but that's it. Just let it ride, all right? Hey, if you got value out of today's video, I ask that you share it on social media. Share it with a friend, right? There's hundreds of thousands of people out there that need this information. It doesn't need to be stressful. It doesn't need to be complicated, okay? As you saw from this video, it takes less than half an hour and you can do it yourself. Hey, until next time, see ya.